Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patrons, ONR, Harry, and Ains. Thank you for choosing to support the channel. In case you didn't know, the X-Account Wall Street Cynic is widely believed to be Jim Chanos, who has for a long time been a short seller of Tesla stock and publicly against Elon and Tesla. The way I see the world, spending any time on Jim Chanos is a waste. However, I'm seeing this line of thinking that he recently shared permeate the Tesla community. Jim said the Tesla faithful, Tesla's not a car company, it's an AI robotics company, and we have to pay Elon $50 billion so he does not start developing similar tech at his other companies. Elon says, come join my separate AI venture, referring to xAI. Exhibit A, here's that sentiment in the Tesla community, which got a fair amount of traction. Neil said first, FSD AI resources were redeployed to Twitter and then to xAI. As far as we know, that was a short-term temporary thing, lasting for a matter of days or weeks. And don't forget, Twitter actually paid Tesla for borrowing those resources. He said second, NVIDIA chip orders prioritized for xAI over Tesla. I would say we don't have any confirmation that that's true. I would also add that Tesla is already telling us they're no longer compute constrained. And on the third front, xAI's plans to develop its own supercomputer, as far as we know, that's going to be largely dependent also on NVIDIA chips. So at this point, I'm not sure what that would have to do with Dojo, because remember, Dojo was custom built specifically for video training data and FSD. Lastly, Neil said he wanted a plan where all AI initiatives were inside of Tesla. In a perfect world, would that be the case? Maybe, but we have to remember AI is now such a broad term. It encompasses many different types of tech. The way I see it, xAI developing a large language model to understand the meaning of existence is very different than Tesla's real-world AI when it comes to FSD and Optimus. Now, in Neil's defense, there is some muddied water here because, as he said at the close, he wanted Tesla to have a stake in xAI, which Elon has publicly acknowledged and said he would look into. Sure, that would be awesome, but given the current legal challenges that Tesla and Elon face and the current legal environment, it may not be something they can get done in 2024. And it's certainly part of the long game, but if Grok ever does make it into Tesla vehicles, that would clearly be Tesla shareholders ultimately benefiting from an xAI endeavor. Back to what Chanos said, no, we're not being blackmailed by Elon for $50 billion. We already had a contract with Elon in which we would pay him $50 billion if he did certain things, which he did. As we've said many times, Elon's comments on taking AI outside of Tesla is only because he has fears about the control of the company, and that's where math comes into play, and Elon wanting 25% voting control, not 25% financially of Tesla. They may end up being one in the same, but technically they don't have to be. I think one of the easiest ways to boil this all down though is just because two companies are working on AI does not mean those two companies are competing directly with each other. And in the case of Tesla and xAI, even if there's never a direct financial or regulatory link, that does not mean that the companies won't benefit from the advancements of each company. And also, to be fair, Elon selling Tesla stock to buy Twitter in the first place is 100% on Elon. That's a big reason why he only owns 13% of Tesla now. However, that decision Elon made has nothing to do with the contract we all agreed to for Elon's 2018 compensation plan. Let me remind everybody, there were no clauses in that plan that said, well, if Elon decides to sell some Tesla to do whatever else, then he's not going to get this plan at all. Definitely not. So at the end of the day, right now, we just have to focus on Tesla in a vacuum. Are we pleased with the progress they're making on Optimus, on FSD, on robotaxis? For now, I think we need to focus on answering those questions, because the reality is, for xAI to have any chance of surviving and competing, they have no choice but to buy as many NVIDIA chips as they can get. The truth is, it's just far too early to tell how this will all shake out for Tesla and xAI. I've said on the channel in the past, 5, 10, 15, 20 years from now, there could be antitrust and monopolistic concerns that are brought up against Tesla, and in that event, if Tesla was forced to divest certain branches of the business, that may not play out well for shareholders, but Elon having separate ventures that still have the ability to cross-pollinate and benefit from each other may be, in the long term, a wiser way to go about it. So I'm very confident in the long run, Tesla and xAI will have a very very mutually beneficial relationship for both parties, and there's still no guarantee that at some point Tesla shareholders don't actually get a stake in xAI, as Elon has alluded to. I know there's a fair amount of uncertainty right now, but we just have to hold tight and remember that takes like this are just super lazy and lack all of the required nuance. Just quickly, absolutely no shade to Neil here. I actually think he brings up some fair points. I just saw it as an opportunity to provide some of the counterpoints as I see things a bit differently. I'm guessing many of you have missed the news that the CFTC has approved a new trading strategy for retail investors like you and I, yet most people have no clue. This can be a great way to hedge your bets if you're into that and to turn your knowledge into potential profits. Let's say in Q2, I think that Tesla will deliver more than 386.8 thousand deliveries for the quarter. I can now actually buy shares or contracts tied to the outcome of this event. And if I'm right, I'll end up making a profit. This is all thanks to Kalshi, the first legal exchange in the United States where you can trade on any event, and they're the sponsor of this episode. Just for privacy, I set up this separate account to show you an actual example. So I'm going to go ahead and buy some shares of Tesla over 386.8 for Q2. I'm going to invest $50 and at 70 cents per contract, I'll end up with 69 contracts. Then when the outcome is finalized, if I'm right, each contract will pay out $1. So I would end up making over $19 in profit or a 40% return. Just click review order and submit. Then if you want to, you can actually get notifications on price movements for your contracts because yes, you can actually sell these contracts on the exchange before the actual event outcome. So if the likelihood of Tesla delivering more than 386.8 thousand goes up, my contracts will go up in value and I can sell them. Plus for all events like this one, the EV market share by 2030, Kalshi links directly to the official sources, so in this case I can go see the Argonne National Lab and the most recent EV sales data broken down by category. One feature I found to be very helpful is the watch list. Of course you can add whatever event you're interested in, but then over time you can actually track how the probabilities for the outcomes of each event are changing. And how about this? Tesla Robotaxi revealed on time. For one contract it's only 53 cents, so from a market perspective it's basically like flipping the coin. And for every event, you can view the full rules right here. There's also far more than just Tesla. We're talking economics, politics, culture, movies, companies, tech, the list goes on and on. If you'd like to check them out, you can head to kalshi.com/electrified, linked below, to get an additional $10 bonus deposited into your account for the first 500 people that use my link. I have a lot of fun with it. It keeps me engaged with different probabilities and ultimately gives me a chance to turn my knowledge into profit. Chris Zhang, who has been a source of sorts for Tesla in China, has said some odd things of late, but this time around he has a screenshot to back it up. Some Tesla China employee cars have had the words employee FSD beta program registered on the cars, but right now no features are actually enabled. Possibly in the weeks ahead, Tesla will roll out some employee testing of FSD in China for initial validation. The German energy giant RWE is pressing on with its proposed 8-hour big battery in New South Wales and has decided to contract Tesla to supply its megapack for this 400 megawatt hour project. What's special about this project is this ratio right here, 50 megawatts for the power and 400 megawatt hours for the capacity. We'll come back to that shortly, but this is going to be the first 8-hour battery to be built in Australia. RWE said, as a battery storage pioneer, we develop, build, and operate battery storage systems in Europe and the US, and soon here in Australia. The head of RWE Renewables in Australia said Tesla will supply the tech and Beyond Energy Solutions will provide the balance of plant works. The battery will connect into the existing substation with construction to begin in the second half of 2024 and commissioning planned for late 2025. Duration, which is usually short for discharge duration, just tells us wherever the sweet spot is between power and energy for a select system, aka where that system is the most cost efficient and is going to be the most profitable. The easiest way to find the technical definition of duration is just by taking the energy, which in this case is going to be one Tesla megapack, which has 4 megawatt hours of energy storage storage capacity. Then you actually divide that by the power, or the greatest amount of energy that the system can discharge at any given moment. Obviously, this ratio would give us a 2-hour duration megapack, which is one of Tesla's offerings, and right now their only other offering is a 4-hour duration megapack. The difference, however, lies in the denominator of this ratio, because the 4 megawatt hours stays the same for both variants of the Tesla megapack, but with a 4-hour duration battery, it's actually a 1 megawatt denominator or power capacity. Here it is, Tesla's other megapack variant, 4 megawatt hours energy capacity divided by 1 megawatt for power capacity gives us the 4-hour duration. And it's actually Tesla's 2-hour megapack that will cost a bit more, because that battery requires some extra inverter capacity to actually supply the extra power. So a battery's duration is just how long it can actually supply its nameplate power capacity before it runs out or is fully discharged. Given there's 4 megawatt hours in each Tesla megapack, and this project will be 400 megawatt hours, that's 100 Tesla megapacks. But we also know that Tesla's smallest power capacity megapack has been 1 megawatt per megapack. But in this case, for this project, they're only looking at 50 megawatts of power capacity. Unfortunately, right now we do not have any specifics on what type of hardware or software changes will be involved with this project, given how current Tesla megapacks are structured. But by far the biggest takeaway here is that Tesla is now tapped for a longer duration energy storage project outside of just the 4-hour duration that many people know it for. Speaking of Tesla Energy, on LinkedIn, their official account shared, "Join us at Intersolar EES in Munich to learn more about Tesla Energy." EES stands for Electrical Energy Storage, and this is Europe's largest and most international exhibition for batteries and energy storage systems. Great for Tesla to get involved, and it sounds like an awesome networking opportunity. So if you're in the area, Tesla will be there from June 19th to the 21st at booth C2.231. If you vote your Tesla shares, you can now win a factory tour of Giga, Texas with Elon, Franz, and some other Tesla executives, no matter how you vote. The tour will take place on June 12th, the day before the annual meeting, and you will also have a reserved seat at said meeting. The deadline to submit proof of voting is Friday, June 7th at 11:59 p.m. Central Time. I'll have a link to this page below if you want to submit for a chance to attend. Policymakers in California are now considering another new tax, who would have thunk it, a new mileage-based tax to offset the loss from the gasoline tax that's being caused by more people switching to EV. They're planning a pilot program for this in August of this year, and they said maintaining California's road network costs around $8.5 billion every year. On average, Californians pay around $300 per year in state gas taxes. EVs have a $100 annual registration fee. That's a $200 million a year loss. They're thinking about anywhere from 2 cents to 4 cents per mile, and yes, this would require the government actually tracking the number of miles you drive every year, and they're testing different ways to do that tracking. This pilot program will help determine whether the road charge should replace the state's gasoline tax. I'll be honest, I don't know what the right answer is to replace this lost tax revenue, but what I do know is this one specifically feels somewhat counterintuitive given the state's large push towards sustainable energy. If EVs, solar, and battery storage really are what your state desires, then why not keep increasing the taxes on the things you're trying to actually eliminate, rather than penalizing the people that are adopting the technologies you said you wanted in the first place? The proxy firm Glass Lewis made it official over the weekend. They are encouraging Tesla shareholders to vote against both Elon's 2018 comp plan and Tesla's re-domestication into Texas. They also made it seem like the following was a negative thing, and that the package would concentrate Elon's ownership, making him the largest shareholder by a healthy margin, when in actuality, getting Elon close to that 25% ownership and a voting control number is what's going to take Tesla to the next level from a market cap standpoint, if they can execute on its AI endeavors. We won't dive into this all again. If you missed the video a few weeks back, I got into this in detail, so I'll have this video linked below and in the card above if you're interested. Back in 2018, Glass Lewis made the same recommendation to vote against the plan, and as we know, it passed with around 73%. It's also true that percentage-wise, institutional shareholders own less Tesla stock now than they did back in 2018. However, these recommendations are obviously being seen by Tesla shareholders, and they may not have any of the background or the context on these proxy advisory firms. Again, if you'd like to learn more about this, I'll have this video linked below. But I would just say hang in there, guys. We have just over 2 weeks and this vote will be behind us. Over the weekend, Yann, a chief AI scientist at Meta, and Elon have had some choice words for each other. All I want to highlight is Yann saying that he was largely responsible for inventing a key technique that led to convolutional neural networks, which in a sense has laid the foundation for a lot of the autonomous tech that we see today. To that, Elon said, "We don't use convolutional neural nets much these days, to be honest." To which Yann replied, "Curious to know how you could possibly do real-time camera image understanding in FSD without CNNs, to be honest." Elon did not say what Tesla is using more of these days, whether it's vision transformers or something else. All I do know is that these convolutional neural nets did play a huge role in helping Tesla get to where they're at today. I'm not trying to pick sides here, I just want everybody who wants to be informed on the details like this to know what's being said. Tesla's still in the process of rolling out its spring software update, and as part of that, they've made 2 new changes. We've talked about the other ones in the past. One, the adaptive headlights for Europeans with matrix headlights will now adapt when you go around curves. Still no update for North America, but the word is maybe sometime later this year. The second one is minor, but at specific supercharger locations, there will be leaderboards now for beach buggy racing too. And when it comes to autopilot strikes, 5 is still the number for suspension, but now Tesla will remove a strike for every 7-day period the driver goes without receiving a strike. Energy Sage put out its 2023 report, and if you're into sustainable energy, I would highly recommend checking out these reports. I'll have their link below. For 2023, they said for the first time in over 2 years, the median quoted solar price on Energy Sage went down, dropping to $2.80 per watt, 3.5% lower than the first half of 2023. Dating back to 2014, solar prices in the US have steadily been coming down as we've known. Then we had the sickness blip where prices went up. Now hopefully we are resuming our downward trend. Energy Sage started tracking battery storage prices back in 2020, and since then the median price for batteries quoted has increased during every 6-month period. But in the second half of last year, that trend has finally reversed, with the median price dropping 6.4% compared to the first 6 months of the year. This drop in prices was driven by a 19% decrease in quoted storage prices in California, where they've seen a nearly 45% storage attachment rate since the net billing tariff went into effect. If you're not familiar, net metering is when your utility company can actually compensate you for excess electricity generated you can provide to the grid. On that front, this new net billing tariff, or net energy metering 3, basically dropped the rates that these consumers were being compensated by around 75% compared to net energy metering 2. While we're here, I feel like I should have mentioned this to you guys before. It's been in my description for a long time, but if you're looking for a reliable solar installer around you that offers competitive pricing, I have found Energy Sage to be by far the best resource. And no, before you even think it, this is not at all a sponsored segment by Energy Sage. I've just found them to be very helpful. They offer a free service that makes it easy for you to adopt solar. They have hundreds of pre-vetted solar installers, so you can make sure you get the highest quality solutions, and you can save up to 20 to 30% compared to the going market rate. Maybe the best thing, Energy Sage is actually free to use. You don't even have to provide your phone number, and you get access to their energy advisors, which in my experience are actually unbiased because they have multiple options to choose from, since their actual mission is getting you the best deal on the market. Again, if you've missed it, I've had their link in my description now for months, dating back to when I actually started looking into solar for my own home. Simply put, if you need education in the solar world, which can be a very daunting task, ask if you're new, Energy Sage is an awesome resource, and again, they're free to use, so they'll always be linked below. We got the weekly number for Tesla China. It came in at 13,200. Comparing it to the same week in Q1, that number was 10,800. Yet again, quarter over quarter, Tesla making up ground, now sitting 17.5% ahead of the pace from Q1. Then year over year, this week in 2023 came in at 12,800. Thus, year over year, Tesla China is still down 4.8%, but still closing the gap. Personally, I'm not sure how reliable the breakdown between Model 3 and Model Y sales are, but I do think it at least gets us into the right neighborhood. If the numbers are correct, this week for Model 3 sales, it was the highest number we've seen since I started tracking this metric dating back to October of last year. It came in at 5,400, but that would also mean there were only 7,800 Model Y sales. If you missed my community tab post on Friday, Reuters did report that Tesla in China has cut Model Y production by around 20% for the period from March through June. And tracking the tea leaves, Tesla has been offering a slew of incentives in the Chinese market. Most recently, Chinese customers who take delivery between May 25th and June 30th will have the chance to win a Fremont factory tour, of course, in the US. Tesla will cover the vehicle owner's airfare and transportation costs. For Tesla's production in the US, rumor has it Model 3 production is back to normal at Fremont. Finally, Tesla has avoided a jury yet again, this time with a conditional settlement we get no details about from a fatal crash 8 years ago. In a new interview, we got some comments from Lucid CEO Peter Rawlinson. In a new interview with the BBC, so your red flag should already be up, Rawlinson said, "What I'm seeing now is a worrying trend towards a sort of distraction. Tesla seems to be distracted, there's an interest in social media, even politics, and it's kind of losing its way. I don't see it having that singular sense of purpose, and I think it really falls to Lucid to take the technology to a whole new level now." In fairness, Rawlinson did have some positive things to say about Tesla, but it was when he was still at the company. He continued, "I think it's very concerning, and as I say, I think there's a clear distraction there from the leadership which perhaps does not best serve those who are looking for an electric future. People rally to a sense of mission, and Lucid has that mission." My honest reaction the first time reading these comments was just, wow. First of all, Tesla itself is not distracted by social media or politics. Let's go ahead and separate Elon from Tesla because yes, a lot of people think they're one and the same, but they're two separate entities. So just because Elon may post about political things on X, the platform he owns by the way, does not mean that Tesla's engineers are now somehow distracted. And to say that Tesla's leadership, that's responsible for everything Tesla has done to date on both the auto and the energy side, does not best serve those looking for an electric future has to be the height of stupidity and insanity. There's no way you can call out Tesla for not being a mission-driven company after reading its impact report. Then to add to that, I'm not sure what Lucid's mission actually is, but so far their best accomplishment is selling a few thousand high-priced vehicles per year. So for Peter to paint Lucid as somehow being a superior mission-driven company to Tesla is just lunacy. On LinkedIn, George Behaydu has said that after being let go from Tesla and the supercharging team, he has now been rehired. He shared what I think is a timely quote from Rebecca Tanucci. "You work at Tesla because you hope to have at least a small impact on our collective future. Aspirationally, to leave the world better for our children and our grandchildren and their children and grandchildren by accelerating the transition to sustainable energy. And that mission is too important to allow any distractions. The hope is when the dust settles, Tesla will have a new, lean, mean, supercharging team." And a quick lightning round for you because it's been a while. Toyota has unveiled plans for a new generation of combustion engines. Specifically, these ones will be designed to be used alongside batteries in hybrid vehicles. The engines should be ready for production toward the end of 2026, and the investment in these new engines will be a magnitude smaller than the funding being poured into EVs and batteries. Toyota said the engines will be between 10 and 20% smaller and will allow for greater output when paired with batteries. xAI did a Series B and raised $6 billion. Elon said their pre-money valuation was $18 billion, which would take their post-money valuation to around $24 billion. In theory, this should drastically reduce the chances that Elon needs to sell more Tesla shares to fund xAI in the future. I'll repeat, I think if xAI is very successful, Tesla will in one way, shape, or form benefit from that success in the long run. BYD just unveiled a new hybrid powertrain that's capable of allowing a vehicle to travel more than 2,000 kilometers or 1,250 miles without recharging and without filling up. The first two vehicles to debut this technology are set to be the Chin L and the Seal 06. Kathleen McCormick, the judge that voided Elon's 2018 compensation plan, said she felt assured by Tesla that it would not use the upcoming shareholder vote to attack her ruling. The legal team for the shareholder that brought that suit in the first place were concerned that Tesla was going to use this re-domestication into Texas to unwind that Delaware ruling. But in court papers, Tesla called that rank speculation, and they said Delaware would retain jurisdiction over the pay dispute. Comments Judge McCormick took as an assurance that the company would not attempt to work around her previous ruling. Judge McCormick must decide if the shareholders' legal team should get that $6 billion they requested from Tesla as a legal fee before Elon and Tesla can appeal. So whatever happens with the vote on June 13th, it looks like Tesla's appeal of this verdict will indeed take place through the Delaware courts. Tesla stock closed the day at $176.75, down 1.39%, while the Nasdaq was up 0.59%. It was a very low volume day for Tesla, trading about 36 million shares below the average volume the past 30 days. Don't forget, check out Kalshi linked below if you're interested. I'm not gonna lie, I have a lot of fun on the platform, and as I said, it gives me the opportunity to turn my knowledge into profit. Hope you have a wonderful day. Please like the video if you did. You can find me on X linked below, and a huge thank you to all of my Patreon supporters.